The Federal Reserve just made another move. They cut interest rates for the third time this year. And if you're watching crypto markets, you already know how big this can actually be. But let's be real, this isn't just about Bitcoin going up because rates went down. There are layers here, and some of them could open the door to a major move in crypto. Others might trigger a correction. So today, we're breaking down exactly what the Fed did, why it matters, what the data says about how crypto responds, and most importantly, what should you be doing with your portfolio right now. So let's get into it. So here's a quick breakdown. The Fed cut rates by another 25 basis points, that's a 0.25%, bringing the federal fund rates down to between 3.5 and 3.75%. Now, on the surface, that might not sound like a lot, but here's why it actually matters. Rate cuts are a signal. They tell the world, hey, we think the economy needs help. But the fact that this cut wasn't a unanimous cut makes it even more interesting. Some Fed officials were pushing for bigger cuts, others didn't want to cut at all. That disagreement shows how divided the Fed really is right now, and that creates uncertainty. Markets hate uncertainty, but they love liquidity, and that's where crypto enters the chat. Let's zoom out and talk about the bigger picture here, alright? Historically, when rates go down, risk assets go up. That's because lower rates mean cheaper borrowing, more money in the system, and less attractive returns from things like bonds or savings accounts. So where does the money go? Into stocks, tech, and yes, crypto. But it's not always instant. Think about in late 2019, we had rate cuts. Not much happened to crypto right away. But months later, when COVID hit and we got emergency cuts and stimulus checks, the markets literally exploded. So the question is, are we in one of those pre-bull run moments right now, or is this something different? Here's what makes this time unique. Inflation is still high. The Fed's not cutting from a place of comfort. They're cutting because they're trying to balance inflation and a weakening economy. And that's a tricky combo, but crypto loves chaos. So let's talk about how crypto has behaved during previous rate cycles. Back in 2020 and 2021, we had ultra low rates, money printing, and people looking for yields outside of traditional markets. That's when Bitcoin hit 69,000, Ethereum crossed 4,000, and even meme coins went crazy. Then the Fed started hiking, and what happened? Total crypto market cap dropped by more than 70%. Risk assets got absolutely crushed. Now we're seeing a pivot, not a panic cut, but a strategic one. What does this do? It invites speculation back into the markets again, and we're already seeing early signs of it. Bitcoin dominance is rising, Ethereum gas fees are picking up, stable coin inflows are growing, and that usually means dry powder re-entering the markets again. But we're also seeing hesitancy. Altcoins are lagging, meme coins are mostly flat, and NFTs are still in winter. So this feels more like a setup, not a breakout, not just yet. Here's what I'm watching super closely right now. If the Fed keeps cutting rates, that signals more easing, which could push capital back into crypto. But if inflation surprises to the upside again, we might see a pivot away from crypto. Risk assets move together, so if tech stocks rally, crypto usually follows, especially with more institutional overlap. Watch stablecoin market caps. When those rise, it usually signals buying power coming back into crypto. Rate cuts might be bullish, but if the SEC drops a new case or Congress tightens rules, that could kill momentum really fast. Bitcoin might move first, but when altcoins follow, that's usually the signal that the retail crowd is weakening back up. Alright, so let's make this practical. If you're holding crypto long term, this is not the time to panic. Rate cuts typically support growth over time, but this is also not the time to ache into low capital coins with no plan. Instead, rebalance your portfolio if you've been too defensive. Watch for confirmed trends, not hype, and if you're trading, look for more momentums of breakout volume, not just green candles. And most importantly, stay updated, because one surprise CPI report or one press conference from Powell, whoever the new Fed chair is going to be, one black swan event can flip this entire narrative upside down. So here's my honest take. This rate cut is just a spark. It's not a wildfire yet, but it could be the start of something big. crypto thrives on narratives, and right now, the macro narrative is shifting. If liquidity continues to return, if inflation cools, and if regulators don't crush momentum, we might be setting up for the early stages of the next bull cycle. But don't chase, watch, prepare, and position yourself not just for today's move, but for what's coming next. If you've made it this far, you're a real one and I appreciate you. Drop your thoughts in the comments if you think we're still in a bullish cycle or if crypto is still in winter, as we call it. And of course, hit like, subscribe, and turn on the notification bell so you don't miss the next big shift in the markets. See you in the next one, and stay smart out there.